Well, one day is Thursday, April 3rd, 2025, and this is the week in charts. Obviously, I thank all you guys and girls for attending today. I appreciate you taking time out of your busy schedule to participate live. And if you're watching recording of this, thank you so much. All right, what are we talking about? Well, current market conditions. We'll have a plethora to say about that. Your questions on trading, your favorite stock and crypto picks. You can go ahead and punch those in at any time. Just put a carriage return after the symbol or hit enter. We got so much to talk about with the methodology in action. I've got some mystery chart reveals, mystery chart updates, options as a substitution for stock, TFM 10% system update, Landry 100. By the way, TFM 10% system is in the sell zone, which we'll discuss in just 1 minute. Now, it's not necessarily a sell, and I'll tell you why in just 1 minute too. And then a little bit more on trading the VIX. There's a couple things that popped up again this week, and we are super duper overbought on that. So we should see a reversion to the mean, easy for me to say, fairly soon. I want to continue the series on a million little things that will make you a successful trader. And this week, there's so many of these little things not to do to cross off your list, so to speak, that I think it could be a show in and of itself. In fact, I actually did 3 shows just on a few of the ones that are in here. And that'll make sense in just 1 second. Anyway, instead of telling you, let me just tell you, there's a claim security. As you know, you can lose money trading ours. I'll often sum it up, borrowing a line from my buddy Greg Morris. All predictions are about the future and a lot of stuff between now and then. There's all my contact information. Obviously, feel free to take a screenshot of that. You can also reach me at dave@davelandry.com. All right, let's talk about the mystery charts and the methodology in action. We have a mystery chart reveal this week, and that is TPR. So if you look at this graphic down here, this is a spreadsheet snapshot, easy for me to say, from last week. The entry was 71.50, protective stop of 81.50. That's a 10-point risk at the IPT of 61.50. So as I said last week, this stock's topped out. It stopped making new highs. Now remember, at new highs, everybody's happy. And when that stock begins to drop a little bit, anybody who bought around those new highs is no longer happy. And then that tends to exacerbate itself as the stock continues to drop. Usually people don't sell stocks on the way down until they start to experience quite a bit of pain. Except maybe the Johnny-come-latelys, they tend to be part of that first wave lower, or certainly the second wave lower, because they have very little staying power, either monetarily or mentally. So the point I was making, again, is just that anybody who bought before these new highs is happy, okay? But as the market drops, this becomes overhead supply. It's just technical analysis 101. So people that bought back here are okay, but now they're beginning to regret their decision. The people who bottom fished it here obviously are beginning to regret their decision too. So anything above 70, they might be looking to get out at break even. That provides a little bit of resistance for the market. Anyway, bow tie to the downside. You can see kind of sloppy. It went from green to red, but it did take a little while. You can see they kind of meandered over. Ideally, you want to see them go from green straight to red. That suggests a pretty serious rollover. All right, getting back to the original setup. Again, we bow tied to the downside, big thrust lower, followed by the pullback. Entry was here. The protective stop was way up here. That sounds kind of crazy, but with these transitional patterns, you're trying to catch your major top, and your stop a lot of times is fairly close to that top. And in some cases, it might be really close to that top. And basically, what you want to do is you want to get out of the market if you're that wrong to where the market goes on to make new highs. And that's where you get in a lot of trouble. I think that's where a lot of shorts get into a lot of trouble. They tend to fight the market. They tend to confuse the issue with facts. They're like, oh, this J-Bill is a bad company for whatever reason. It shouldn't be going higher. But, you know, back here, but it is, okay? What is, as I preach. Anyway, that's the IPT on that one, as you can see. And then you can see in the spreadsheet, I went ahead and punched it in at 124 because that was our IPT. See it over here, 124. So yellow means we hit the IPT. CCL, which I'm not showing this week, but I'll follow up on this one next week. You could see we did get that initial 1% move that we're looking for off of it, off 100K account, so that's $1,000. Again, I played the options on this one, and I just thought I would reload at some point in time, and that's a short side. I never let you back in sometimes. And then you can see that we're in longer term trend following mode on the remainder, and we're doing okay, $1,475. Now the JBL, the entry was, I'll show you the options plays on this one in just 1 second, but the entry was 142, and there was a little slippage around the entry, so I put 141.70. Looked like about a plausible entry on that one. Again, I didn't outright short JBL. I took the options positions on that one. Anyway, so right around $1,000. The first half of the trade is not where you're going to get rich. That helps to keep the lights on. It helps to keep you in the game. It helps to cover some losses, right? And the real money's in the second loaf. So if you're not getting quite that 1% on the first loaf, that's okay, but try to get as close to 1% as you can. Now, in some cases, the market might just gap down and keep on going on a short. So you might be able to trail out intraday and squeeze out a little bit more than 1%. That's a little discretion there that could help you out. So this is one, I thought I had it in here, but I didn't update it. So this was the CCL, that was the bow tie. And again, you could see it switched from uptrend proper order to downtrend proper order fairly quickly, a day or two, but it does have that nice bow tie appearance, as you can see. Thrust lower, entry was there, stop was up here, initial profit target was down there, and you can see it retrace back up since, and now of course it's going back down once again. Anyway, when that occurs, when you hit that IPT, your stop goes to break even on the remainder. And the idea is to establish a free position, so to speak, to free roll on that. Okay. Any questions thus far? Okay, so TPR, what I did initially with that one was, this was on the 28th of March, and I knew I had to establish a position, and the options were expiring on that day. So these are 0 DTE. D is days, T is till, and E is expiration. So 0 DTE means those options expire today, okay? So any option, if it's a 100-day option on day 100, is a 0 DTE, right? I know we have new 0 DTE options out like XSP and things like that. Anyway, so they were 25 cents for these out of the money 71s at the time. So I was like, well, hang on a second. I need to short 200 shares to mimic the service. That's a $2,000 risk. However, the market back here was kind of jerking around a little bit. You can see it triggered and then spiked back up a little bit or whatever. And I said, okay, I need to be short this stock because I need to mimic the service as closely as possible, but I don't trust it just yet. So in order to establish my position, I figured those options at $25 each might be worth a shot. So for 50 bucks, okay, I could establish the position that I need and hold it for 1 day, okay? And it might be worth a shot. Now, normally in a case like this, I'll flip out half at a double, but in this case, I said, well, let me just hold on because I'm supposed to be short this stock anyway. So I bought the 0 DTE options right there. And I figured, again, they weren't that far out of the money, less than a point out the money for 25 cents. Now, I've gotten in a lot of trouble doing this in the past, so I don't want to talk out of both sides of my mouth. I want to let you know that stuff could happen, right? A lot of times, options just seem insanely cheap, not from a modeling standpoint. I don't want to get into all that stuff. Everybody's got the same model, so that doesn't matter. That's a wash. I kind of go by feel a little bit. I'm like, well, hang on a second. So for 50 bucks, I would normally risk $2,000 in this trade, so I could risk 50 bucks, at least in the model account. Now, I did this across multiple accounts, and I did this option of trading across multiple accounts. So it's spread out. But in this particular case, with the model account for 50 bucks, I could establish a position. And if it doesn't work out, then at the end of the day, I can decide whether or not I want to short the market. If it makes a major reversal, goes straight back up, then it's like, well, so what? I lost 50 bucks. Okay, we have pizza tonight instead of steaks, and then nobody knows, right? It didn't get hurt too bad. One other point I wanted to make, I didn't close the loop on it, is a lot of times when you see those really cheap options, you can't understand why they're so cheap. Sometimes it's like, especially if you buy them, all of a sudden they expire worthless and you realize why they were so cheap. So keep in mind, the guy other than a trade is probably a little smarter than you, unless you're a crazy options expert like Larry McMillan. He's probably the guy on the other side of the trade. But just because something's cheap, you don't want to buy it. But I justified this with, okay, it's only 50 bucks, okay? And I get, again, I'm beating a dead horse here, but I get to establish a position. And for 50 bucks, I could go about my life. And at the end of the day, I can decide whether or not I want to be short this stock. So again, usually when I buy these S&G type of positions, I'll flip them out at a double, half at a double, so I get a free roll and a remainder. Now, I also decided to go ahead and put on my position for the stock because the stock began to drop a little bit. So this would be I would mimicking what I wanted to do with the service. So I went ahead and bought two of those. What puts were those? Those were 75 puts at 465. And that seemed kind of cheap to me also because they were fairly deep into the money already. Now, again, normally if I'm taking a small option trade like that out of the money, super speculative, I'll flip out half at a double so I get a free roll. But this thing began to break down. And as it was beginning to break down, I thought to myself, I was like, well, hang on, Dave, you want to keep that position on just to see how it works out. Let's go ahead and just keep it on. It was only 50 bucks. Maybe you got a chance to make some real money here. And then again, after it began to move in my favor, I decided that I also wanted to go ahead and establish a longer term position on this particular stock. So I sold one at 125, which is, what's that, 400% or 5%? 5% gain. I know it's fuzzy math. It's 100 bucks, right? And then I exited the rest on the close for right around the intrinsic value of the stock. So again, I outlaid 50 bucks. There's some commissions in here, so add in a few bucks for that. It's negligible. Made 125 or got back 125, and then I got back 165 on the close. So add that all up, it's a $140 day trade. Now I wasn't going in saying I'm making this day trade. I went in to say $50 is what it's going to cost me to establish a position in this stock. I know I'm beating a dead horse, but options could get complex, and I know I'm going to get a lot of questions on that. All right. Now, here's the thing. Obviously, I just showed you a smoke them if you got them situation. And that means if you hit the initial profit target, you're taking off half and you're getting that stop to break even. Now, when you come in and futures are down 200 points and stocks are just getting annihilated, okay, that's a good time. Whenever you pull your calculator out and see how much money you made, that's a good time to lighten up a little bit. And even if you're not to that initial profit target where it's like smoke them if you got them type of situation, sometimes you might want to not look that gift horse in the mouth. And as Linda Rasky says, feed the ducks while they're quacking, because it's so oversold so fast, you're going to have a bounce against you. So it's okay to lock and load on some of those profits. Now, let me show you what I did with the options in the TPR. So again, I did that trade I showed you, that day trade, and you can see that's in here too. 0.25, 125, and 65 for the buy and the sells respectively. And then I went ahead and picked up some in the money 465s. I'm sorry, in the money 75 puts, okay? So that was, I forget exactly which day that was now, but it was back here somewhere to where the stock was nicely in the money. Oh, there it is right there. I have an arrow. So right here, I bought them and the stock was around 71 or somewhere around there. And then, so that's like 4 points in the money. And again, to me, 65 cents for a few weeks doesn't seem like a lot of money. Now, maybe some of your option guys are like, oh, Dave, that's an implied of whatever. But to me, I'm like, you know, I can pay 65 cents for these options plus the intrinsic, of course, and I can sleep at night, okay, as opposed to having open-ended potential risk with a short. But anyway, I bailed out on one this morning, and it wasn't quite to that double that I like on these options. Now, let me rewind that a little bit. Ideally, if it's an S&G type option like the one I bought for 25 cents, like if I'd bought 10 of those in this account, I certainly would have flipped out 5 at 50, okay, just to cover my cost. But just that small position that I took to mimic the position of the underlying stock, I said, well, let me just hang on, see what happens, and we'll get out half at a profit and then half at the end of the day. So in this particular case, when you have a deep in the money option, you have to manage it a little bit differently. You don't always get that double, okay? Now, in an ideal world, I would hold on to this just like I do with the stock. I wouldn't sell the stock quite this early because I'm trying to mimic that service as close as possible. But in this particular case, I'm right around a double on the options, a little bit shy of that, and I could hear Linda's voice in my head, you know, feed the ducks while they're quacking. And so I went ahead and bailed on one of those options, and this is how it shook out. So not quite a double. So net, not counting the day trade of 140, but net for this position trade, so to speak, there's an $80 loss, okay? And then now I need to kind of think about possibly rolling down the option or dealing with the option. Remember, a lot of moving parts with options. The problem now is the implieds are through the roof because the market just crashed, okay? The bomb's already blown up. So it's be hard to be buying any options at this point. You're better off, like Linda says, feeding the ducks while they're quacking. So that's how that trade worked out. Overall, it's a free ride, okay, a free roll. We'll see what happens. On the position part, a little bit less than a free roll, cost me 80 bucks, a little bit more of a commission. So let's just say 90 bucks round numbers, and we'll see how it shakes out, as opposed to spending $2,000 by using a stop. So that's that one. The JBL, the 145, I bought those at $6.80, okay? And so they were close to 5 points in the money at that time. And by the way, without going into a lot of details, the reason you're going into money is you want your options position to mimic the underlying stock. So you want to get that delta approaching 100. In other words, the option should act like 100 shares of the stock, okay? So in this case, I was able to get a double out of it this morning, a little double plus, okay? Because by the time I got my orders in and went ready to sell, it's like, well, hang on a second, Dave, you're getting ready to give this guy a gift. I was going to sell for less than intrinsic, and of course, I always check that before I go or hit send. So 2 at 680, and then sold 1 at 1670. You add all that up, so $310 profits. This is in the model account. Again, this is the model account based on the 100K account. And so far so good on that, knock on wood. Now I do still have a option that is way in the money, okay? 16, 70 points in the money. I don't want to give up all those gains. So now I need to think about, after the webinar, what am I going to do to try to mitigate the open losses there? But again, the problem is the option prices are expensive, okay? So it's gonna be an interesting thing. Like sometimes what I'll do, just FYI, let's say I have 2 on and the market begins to drop nicely in my favor, I might put on 2 out of the money, okay? And then in effect, I've doubled my position size. Now you got to be super careful when you do this, but what I'll do is I'll trade out of those first 2 while these other 2 are working. And every now and then it works great, but sometimes it does this, obviously, and you've got to be really disciplined to get out of those deep in the money options. Anyway, so that's how that shook out. I'm always nervous to talk about options because people who know options are laughing at me, and people who don't know them are probably thinking, what the hell did he just say? Okay, the VIX has been really interesting lately. And as I preach, it only matters when it matters. So again, this is my VIX chart. S&P 500 is in the background, and there's a 10-day simple moving average on the VIX, okay? And then down below, I'm measuring the high, the low, and the close away from the 10-day simple. My original position trading VIX systems published, when did I publish those? Late 90s. And that was research was done in conjunction with Larry Connors. They were position trading systems where you would hold shorter term. And I was looking at them a while back, as I said, the last few weeks, and they absolutely printed money. I hadn't looked at them in a while as far as position trading is concerned. And as I was doing the back testing to see what happens, I guess it's walk forward testing. But anyway, it printed money until something happened. Well, that something was COVID, okay, to where that VIX got stretched. It keeps stretching and stretching and stretching. So I don't recommend you position trade, short-term position trade, any positions, believe it or not, even though I'm slotted as a swing trader. The real money's in the longer-term trades, and bad things can still happen shorter term. That's why we're doing the money management, where we're taking partial profits and trailing those stops and so on and so forth, and trying to get those free rolls out, right? That's the secret, or one of the few secrets to trading success. But anyway, it is useful if you pay attention to this VIX when it gets overbought, stretched away from that moving average. You can look for a reversal in the market, possibly intraday. Okay, so you can see big spike of the VIX here, and then the VIX begins to implode, and what happens? The market begins to rally. Now, a few days ago, I posted that the VIX was stretched to the upside once again. Okay, so 10% or more. This is the distance it's stretched, right? And that suggested a reversion to the mean down in the VIX and a bounce up from oversold. Now, this is just something you want to do on an intraday basis, okay? So if you take a look at like a 5-minute chart, you could see after I made that post, the stock market rallied and the VIX imploded. So you might be able to play, this is where it gets a little complicated, but you might be able to play an ETF on VIX futures, which is not quite the same as the VIX. The VIX is a derivative of a derivative, and the futures is a derivative of a derivative of a derivative, and the ETF is a derivative of a derivative of a derivative of a derivative. Does your brain hurt yet? And keep in mind, and I see people say things wrong all the time, and I realized that after Larry McMillan pointed it out. Sometimes on TV, they'll talk about these VIX ETFs, and they're based on futures, and they act like a bit of a different animal than the VIX itself. However, there is some use in them, especially if you're doing them on an intraday basis. Never say never, but in general, I would not hold those VIX ETFs overnight. But anyway, nice little reversion to the mean move. If you want to look at that, both in the VIX and in the cash, okay? Now, right now, I grabbed this right before we went live, and at that minute, we were 43% away from that moving average, and that suggests that that VIX is due to implode a little bit, okay? And then that stocks are due to rally, and so far that's working out. I do not have a position because I'm doing this show right now, and it's probably for the best. It's probably keeping me out of trouble, but keep in mind that we're due for a bounce, and this is another reason, if you're short, feed the ducks while they're quacking. Yeah, keep a little piece on like I did with those the TPR and a JBL to continue the longer term trend following, but make sure you get some profits off the table. Now, just real quick, I'm just going to go through this real quick because we talk about this every week. Treat it as a reversion to the mean type of trading, not classical technical analysis, as I've said 1,000 times. I'll see people draw head and shoulders in the VIX, and that's not how it works. That's not how any of this works, as Beatrice would say. And it only matters when it matters, okay? High or low is relative, as I say each week. And last week I saw somebody else doing it. I would never throw anybody under the bus, but people tend to talk in absolute levels when it comes to the VIX. It's all relative. It's based on how far it's stretched one way or the other. Don't be a hero. Wait for the reversion to mean occur. I said I wouldn't take time on this, and here I am. And don't short-term position trade. Again, don't position trade on something like this because Reversion to the mean trading can get you in a lot of trouble, but intraday, I think, is a good way to look at it. Also, major bottoms can start with a spike, and that's one thing that I was talking about this morning in the market in a minute, is that it just didn't feel like a bottom lately. Yeah, it's been ugly, and it seems like everybody's been talking about how ugly it is. I'm like, really? It's like I've seen much uglier. And today kind of feels like at least the beginning of the end, the beginning of that washout. Now, I'm not saying we're out of the woods yet. I'm a trend following moron. I'm not going to call the bottom. But if this VIX continues to spike like it has been and spikes even further, it gets 60 or 80%, 100% away, or 10% away from that moving average, then we might have a temporary bottom in place. Okay. Check back often. It's good to use as a gauge for, again, overbought and oversold. All right, real quick, TFM 10% system without going through all the rules. We are on the cusp of a sell, okay? Now, a little asterisk there is if we close below this level on Friday. So a close below the 10% line, which is 10% of the 50-week closing high, which would be right there, okay? Right there. We just made a 50-week closing high a few weeks back. How crazy is that? And now we're way down here. So we are 10% or more away from that 50-week closing high, and we're below the 50-week closing moving average, okay? So simple moving average, 50-week SMA. So on Friday, because this research was done on a calendar chart, which is kind of scary, we got to make it through today and most of tomorrow, obviously, Friday's close. If we are down below that, looks like 5,500, if I could see it, line, then it would definitely be a sell. Now, as you know, the Qs hit a sell signal a few weeks back, and we exited that trade. This little 1 and 2 needs to be way back here. So I did, when I updated chart, I forgot to move it over. And that was just 2 bars of Landry light. That was the buy right there. So pretty good run, better than poke in the eye if this is the end, but we're getting closer to it. All right, a couple things I want to talk about with the Landry 100. As I've been saying the last few weeks, it hasn't done well lately, and that's no big shocker, okay? But this is an experiment, except for I did use a little real money with it and got a little burnt in the process, but we'll talk about that in just 1 second. Now, one thing that's kind of cool is that these are all bought at brand new highs. And the thing that's kind of cool, as I'll show you in 1 second, is that it helps for you to see where the money's flowing, okay? So all are bought at new highs, and this one's up 83% round number. So it was bought right there, kind of a stealthy closing high. I have a simple little formula, which I can give you if you want, which is just looking at the yearly 52-week, that is, closing highs, and where are we relative to that. So if it's 1 or 100%, however you want to look at it, then it would be a potential buy, okay? So that was where it was bought. And then obviously it's had some gyrations since, but it's up 82% since then. Now, this is the cool part. I was getting a little ahead of myself there. Now, what's great about doing something like this is it shows you where the momentum is flowing, okay? And I didn't even realize it, but I have Berkshire Hathaway as one of the stocks in here because I just said, okay, that looks good. It's making new highs. Let's put it in the list. And that's being a true technician, because normally I'm not a fan of something like Berkshire. And, you know, maybe I'm just jealous, but every now and then Berkshire loses half. They lose half of your money. And he's touted as the greatest guy in the world. Well, any other hedge fund, okay, in the world would be out of business if they lost half of your money, right? But anyway, I digress. But what's kind of cool is you can see that neck, it says basic materials, but that's a silver stock, okay? So you got a silver stock, metals and mining, whatever. And then you've got a grocery store, you've got Philip Morris, which is tobacco. So those are defensive stores because you're still going to have to eat and smoke. For those of you who smoke, you probably can smoke even more in a bear market, right? Some healthcare, some utilities. So you can kind of see where the money's flowing. As you go further down, there's another gold stock, okay? AT&T, I don't know why it's defying gravity, but I just have it in the list. So when you zoom in, you can see them a little bit better. And again, there's a gold stock, a grocery stock, a tobacco stock, healthcare, which is not really doing fantastic right now, but it can trade constantly the overall market. A brokerage, CME, or an exchange, I should say. So, like I think it was Gary Koltbaum pointed out the other day, the bookies are doing well, okay? Because there's a lot of buying and selling going on. AEM, again, another gold stock. So it really helps you to see where the money is flowing. It's a great experiment, if I say so myself. And this is left over from last week, but a lot of golds and metals were in it at least last week. Couple random thoughts. Momentum ends badly. Now, when I put that in there, initially, my point was that, okay, you're trend following and you're up 200%, and then you get stopped out and you make 150% or 175%, whatever the case may be. All trades eventually end badly from a trend following perspective. And by the way, the only way to ever make money in the market is to capture a trend, right? So I'm going to show you a case where it really ended badly, and it happens. Spell with a silent SH. Relative strength in a bear market is okay, but they eventually find you. I showed like the Abbott, which was a drug company. Drugs were doing really well. Major drugs were doing really well in spite of the overall market, but it's almost like the market caught up to them. So be careful buying the strongest stocks in a bear market unless they can trade contra to the overall market, something like the golds, okay? But that's where the list, again, because I'm not judging the stocks that go in. I'm just throwing them in there for this live experiment, or this ongoing experiment, I should say. It's still a great way to see the money flows. I saw those major drugs come in and then they stopped out, and now I'm seeing some super defensive stocks come in and lots of gold still coming in and things like that. So it's good to see the money flows again. Now, here's a case where it really ends badly. Now, I don't have any money management in this list whatsoever. I probably should put some. What I did with a live experiment personally was take small positions in a lot of these, and I was establishing a portfolio, and I decided that I would take profits at 100%. So you can see I took a small position here, like $1,000 or something like that, and then I sold half of the shares, and I made $515 on the trade. Now, of course, the remainder of it is worthless, okay? So the whole thing was kind of, you could kind of look at it as an exercise of futility. I put about 1,000 in, 1,000 came out, and then now I have a free position, so to speak, that's not worth shit. But you can see, so in the Landry 100, when I took it out, that's a 90% loss, okay? So that obviously ended badly, but the original ended badly. It's like this KC. I think this KC, I don't remember exactly how much, but if you go in and watch prior presentations or just plot the chart, prior to 328, it was a lot higher than 113%. So anyway, that's the Landry 100 for what it's worth. Great exercise, if I say so myself, in managing that portfolio, so to speak. I learned a ton from the process. It reminds me of a ton, and it really does give you that proof of concept when it comes to trend following. And again, not to beat a dead horse, it kind of steers you into the direction of where the little money that's still buying is flowing. Okay, any questions on any of this? All right. And if you're watching the recording, feel free to leave a comment below. If you like what you see, then hit the like button. If you don't like it, then go have no fun somewhere else. But thank you for watching it anyway. Also subscribe, and that really helps the channel out quite a bit. I don't pimp my channel enough. I probably need to. Okay, one of the things I was thinking about last week, last minute, right as it's going live, is that ticking off your bad behaviors is probably a good idea when it comes to trading, because we all have these bad behaviors. And if you recognize that you've committed one of these crimes, okay, then check it off. And as my wife once said when I screwed up something, it was not that big of a deal, but she said, you'll do that once. Like, It's a life lesson. You're going to remember that you did that. It was something stupid. I left the card. It was that right after my first daughter was born, and I was a little freaked out, and I went out to get some food for us or whatever, and I left the card in the ATM. Whatever, no big deal. All's well, ends well, no big deal. But she said you'll do that once. I'm sure she probably did the same thing back in the day. But anyway, getting back to this series, everyone thinks that you're going to have some huge epiphany, and all of a sudden, I'm a trader, right? Because whatever just happened, I get it now. I understand it. I'm just going to make money from now on. Well, it's really a million little things. And when I started this series, I was being a little tongue in cheek, thinking like, well, surely it's not a million, but we might get to a million. Who knows? But number 358,161, tick off your bad behaviors. Now, again, these need to be a you'll do that once. And believe me, I've done every one of these many, many, many times, more times than I'm willing to admit. Now, system surfing, grail chasing, trading the arcane are esoteric, okay? Keep it simple and recognize that nobody has a holy grail. As I've said 1,000 times, I know a lot of these people, and I don't want to name drop. I know I name dropped a little bit already, not intentionally, okay? But I know these people. Some of these people have visited me here, or at least at the old house. I have visited them. I see them at conferences, and we have a beer together or whatever, or lunch or dinner. And the point I'm trying to make is not like, look at me. It's like, no, it's one of these guys or gals, okay? If there was a holy grail, would have found it by now, okay? Because some of these people are brainiacs. So there is no holy grail. That's actually a good thing. That means that something simple can work. This trend following moron stuff could actually work. Not all the time. I got raked over the coals recently. I was a little down in dumps from it, truth be told, not that long ago, because I had a few losing trades, okay? And it's hard enough to lose your own money, okay? But then recommend a stock and then have people rake you over the coals. Unfortunately, this gentleman didn't take 2 out of 3 of the losers, which is another lesson altogether, okay? You should take everything, right? But nobody has a holy grail, okay? And this trend following stuff doesn't work all the time. And that's probably why it works longer term, because it doesn't work all the time. Because people come into it like, okay, let's try a trend following thing, and they get their ass handed to them like, okay, well, that doesn't work. Let's go try something else. So save yourself a lot of times. I've done complete presentations on this in and of itself, but the system surfing, the grail chasing, and trading the arcane or esoteric, that can really get you into a lot of trouble. Now, what I would recommend you do is just the opposite of what most people do, is find something simple that works and use it and become successful with it. And then if you want to venture off, you could do that, right? I've had a lot of people start with my stuff and go on to do great things with like options. And then there's an international bond hedge fund. And this guy started by doing the trend following moron stuff, and then he gravitated towards this more complicated type of arbitrage situation. So go where you want with it, obviously, but do it just the opposite. Start with the simplicity, and then I would recommend you stay with simplicity, but if you must make things complex, then just make sure you're successful first with something simple. One quick point here, and believe me, I could bore you to death, but I could spend hours on each one of these, so I need to speed it up a little bit. But the thing is, I remember seeing Toby Crable in 1995, and he showed his performance, and he says, we have developed some additional patterns that we're going to add to our portfolio in 6 months. And based on our modeling, we think that when we add these in, our performance is going to get incrementally better by X amount. And he showed all the graphs and the charts and everything. And I was kind of blown away with that. because here is someone very smart, and he's discovered some new patterns that he wants to implement, but he's going to implement them 6 months from now, okay, to dot his I's and cross his T's and make sure everything works. As I've said before, I was talking with a trader once, and he was trading this new pattern. It happened to be working. I'm like, well, that's kind of neat. I don't really get it. I haven't wrapped my head around what you're doing, but that's kind of neat. When'd you learn that? He goes, well, this morning. So it's like, well, hang on a second. It's like, here's a guy learned something in the morning, okay, and then a few hours later, he's actually trading it, which is the complete polar opposite of somebody like Toby Crable, who has something that I'm convinced he knows works. He's probably done 6 months work going into it on this few patterns, whatever he's trading, and then he's going to wait 6 months he implements it to make sure it works. So if you took that kind of mentality, then I think you do much, much better. And the bottom line is, as I've been saying lately, is you don't have enough time or money to try everything, okay? Trust me, you don't. Recreational trading, you got to be really careful with that. That's trading out of boredom. As I often say, trading when you have time. I knew a guy, woke up in the middle of the night, couldn't sleep. He went out to his he had a shed / office that he converted or whatever. He goes out there, he starts trading S&P futures in the middle of the night. Next thing you know, all 3 of his kids find their way out there. It's because they see the lights on in daddy's shed or whatever. So he goes, put them all back in bed. And when he gets back, he lost a lot of money. Now, he should not be, if that's what you're going to do is trade every night, then set yourself up to trade every night. But don't trade just because you have time or because you're off of work or whatever the case may be, because you can't sleep. Or especially if you're bored. Living and dying by the sword, I can be guilty of this one. I tend to wear my feelings on my sleeve. I'm a real emotional guy. I'm probably not the best guy when it comes to trading as far as the emotions are concerned. Just yesterday afternoon, I'm doing the trading service, and I'm a little bummed out because the shorts are going against us. And if you listen to it or listen to the archives on it, which you can find on YouTube, my YouTube channel, YouTube/Dave Landry. That'll be public. I'll make them public soon so you can see it. Or DaveLandry.com/archives. You can see that I was a little bummed out. I know me. I can hear it in my voice. I was a little bummed out because the market went against me on these shorts. Okay, and then I get through with my trading service and I look over and futures are down 90 points. Okay, in after hours, and I'm like, oh, okay. Well, I let that get me more upset than I need to be. And you have to manage your ups and downs. And again, each one of these could be a complete presentation in and of itself. In fact, I did 3 presentations very similar to this, and I'll put the links down below. And if you can't wait or can't sleep at night, if you go to my YouTube channel, again, youtube.com/Dave Landry, and search for how to fail at trading, there's 3 weekend charts that I did back to back on that. Blaming others, not owning it, boy, that's a big one. Or letting somebody like a trade go, let them suck you into a trade that you didn't intend on taking. Our whole lives, from a business standpoint, in an office standpoint, there's always somebody to blame something on. Rarely is it your fault that whatever effed up, right? In the trading world, it could be a little lonely. You're the only one, right? So that's a big one. Obviously, not honoring your stops. That's kind of a no-brainer. One thing I was thinking about as I was going live is stop creep can be like a really bad problem. Let's say you have a position on, and it just kind of nicks your stop. And this is let's say a position you tend to hold for as long as possible. Well, you say, okay, well, Dave says I can apply a little discretion and just kind of nick the stop. I think I'm gonna hang out, okay, and see what happens. By the end of the day, you're higher. You were long the stock, you were higher, so you're like, okay, things are good. I'm cool with that. But then the next day, all of a sudden, it opens down a point, okay? And you're like, crap. So you put in a stop, maybe below the low. Maybe you're prudent, you do that. And then you don't stop out by the end of the day. It's like, well, okay, I'm going to hang tight. Once again, I use a little discretion. But before you know it, that stock can just keep inching lower, and you end up with a huge loss. So that's one way of not honoring stops. Hyperactivity, you can't catch all the zigs and zags. Believe me, I have tried, okay? I've tried to And one of the things I want to put in here that I forgot to put in was trading for income. Very hard to trade for income, okay? The market is not there to give you a paycheck. It will give you a paycheck longer term if you are prudent and you're following conceptually correct longer term trend following methodology, swing to intermediate term like we're doing, okay? But as far as collecting a paycheck, in spite of it all, the YouTube people tell you, you cannot collect a paycheck from the market. But hyperactivity, it's like you need to be as close to the market as you need to be, but no closer. Obviously, busting the trading plan, micromanagement. Micromanagement is one of the greatest sins. And then possibly not having a plan to begin with. Now, here's a big one. And this is what I call foresight and hindsight, right? And I've said this many times, obviously, but have you ever taken a trade and it fails miserably? And as soon as you stop out, you drop an F-bomb. Here's my F-bomb here. Let's see if I can drop it. I'm always afraid to drop it. So, weighs a ton. But anyway, you get out of the trade and you drop an F-bomb and you're like, I knew I shouldn't have taken that trade. So you knew going in to that trade that you were trading, you were dealing in mediocrity. Anthony Bourdain said mediocrity is the greatest sin. I've written a really good piece on this in my humble opinion, which I know you're not supposed to say because it's my opinion, right? But I think it's really good. And I think that mediocrity will kill you in trading. But how many times, and raise your hand. I'm raising both my hands, or if I could raise more things, I would. Am I getting ready to monetize again? But how many times have you taken a trade? It's like, I knew I should not have taken that trade. That trade. That's what it should say. Succumbing to extraneous influences. Geez, that's a tough one, right? Fight with your spouse, fight with your significant other, fight with both. Maybe you shouldn't be trading if you have both. Trade goads, like I alluded to a minute ago. Somebody else is doing something that's not your methodology, but you're like, oh, I'm just going to piggyback off of them, so to speak, right? The problem is they're not going to tell you when they got out. They're not going to tell you how many times they lose trading whatever they're doing, unless they're stupid like me and tells you, oh, yeah, we lost our ass on those trades or whatever. Put them out there for all you guys to see. As opposed to like, hey, look at me, Mr. YouTube Guru. I told my daughter once, my youngest, I said, I was trying to explain to her some of this business stuff that I do, whatever. And I said, I could make a lot more money if I would sell out and just tell everybody you can make all this money trading or whatever. And she's like, sell out. I'm like, no. This is supposed to be a life lesson. She's like 10 years old. She's always been an ideas girl and inventions and stuff and just wanting to make some money. God bless her. There's the trade goads, okay? Unplanned trades, okay? Every trade should be planned. If all I did was plan trades and take the plan and follow the plan, I would do fantastic all the time. The service, the trading service, okay, that forces me to follow my plan as best I can, okay? The options obviously make it a little bit more complex. But for the most part, I follow that service to a T. And it's like, it's amazing how, what's the word I'm looking for? How, I can't think of it, not cathartic, but how much easier life is if you have a plan and you can follow the plan, okay? For instance, okay, if you have a stop and I have to mimic what I'm telling you to do, right? Okay. And it's all for education purposes anyway, right? But I'm trying to keep it real. And if I have a stop in place, like yesterday, okay, my stop wasn't hit, I shouldn't have gotten upset about that, right? But it's a lot easier knowing that plan's in place and knowing that my commitment device, so to speak, as I often talk about these commitment devices, my commitment device is I have to follow these plans because people are counting on me, okay? So it's like, well, I didn't stop out, so what's there to do? Nothing. Okay? Yeah, you can drop an F-bomb, get a little emotional, but don't do anything. Failing to document, boy, I tell you, when my trading gets poor, or if I'm trading poorly, I stop documenting. I caught myself doing that a few times not that long ago. If I stop writing down my trades, something's wrong, okay? So trading is making mistakes, correcting, and hopefully making smaller and fewer mistakes. And this is why Once you check off all these, you're finished with all these, right? Wouldn't that be a great, wonderful world to live in, where I would never trade out of boredom or recreational trade or S&G trade, to except for a little bit here and there, right? But it's important that you, important as the people say nowadays, to document your trades. Confusing issue with facts. Is the market going up? Is the market going down? Should the market be going up? Should the market be going down? It doesn't matter. Okay. What is. And then of course, along a similar vein, given credence to the situation in Nigeria, which is news. Okay. Trading out of a position, boy, I'm guilty of that one. You hit the stop, okay, or the stock hits the stop, and you're like, well, I got to get out, hit the stop, but let me just see what happens. Before you know it, you end up with that stop creep or whatever else, and you end up losing a lot more. Trading not to lose, boy, I'm guilty of that one sometimes. I need to check it off. And you know what? I almost did it this morning. I had some orders in to play some of this stuff at the market. And before I clicked enter, I came to my senses, okay? Because what I've been doing lately, especially now the volatility is so crazy, is I'm kind of doing that. What would Dave Landry do? It's like I've told you before, wind the clock or anything that takes a few seconds. Okay, that's a commitment device, wind the clock. And just in those few seconds, you're able to kind of think through things like, wait a minute, do I really want to jump in this crazy market at this time? Okay. And the answer is no. And then luckily, to help me with my decision, the market started backing off a little bit. Okay. And FOMO needs to be one of these. And I probably got a little FOMO. And, you know, sometimes I get full of myself, especially when things are going well. Again, dealing in mediocrity. Mediocrity is the greatest sin. Lately, there's been a few longs here and there setting up, and I've been showing them in the Landry list. And I'm like, you know what, guys? I'm not going to take it. It's not worth it. Okay. Number one, it's not the greatest setup in setup town. Number two, it's not a gold or something that could trade contra to the overall market, like a gold or some other commodity. And number three, I don't have the market behind me or the sector behind me. So it's like the odds are stacked against me. Why do I want to go after mediocre setup? And as I beat the dead horse on all the time, patience is one of those secrets of trading. Anyway, I can go on and on. Like I said, I did 3 weekly charts just on that, and I'll put the links down below to those. All right, let's shift gears. Let's hop into crypto. I doubt there's anything to do with crypto, but we'll take a look. And then obviously any questions you guys have, feel free to type them in as we go. Since I started the Facebook group, we don't get a lot of interaction, but that's cool because we're interacting over in the Facebook group. It's Dave Landry Trend Traders. You do have to be a gold member at least of davelandry.com. All right, so here's Bitcoin. The 30 EMA, as I often preach, is often your best friend in pretty much any market for that matter. Never buy a market, as a general statement, when it's below the 30 EMA, okay? And you can see that Bitcoin's been in a downtrend, and most of that downtrend, especially if you're looking at something like a moving average pivot, which is something I play with quite a bit. And we've got a guy in our Facebook group that's been playing with them a little too. And they're kind of a cool thing when they work, just like anything trend following. And by the way, a lot of trend following, or all trend following, tends to look the same after a while. So my stuff's going to look the same as a lot of other trend following type of stuff, although mine's superior, of course. But anyway, notice these little pivots in here. It's falling tops with these little pivots, and it's really not making any progress. And if you don't know anything about markets, draw your big blue arrows. That's the hardest thing for people to understand. It's like I have some friends calling me up. Is it time to buy Tesla? I'm like, no. It's like, why do you want to buy Tesla? It's like Tesla's like, because it's cheap. I'm like, ugh. That's a relative thing. And you know, Tesla's got a bad rap lately, by the way. And you know, people are obsessed over Tesla. It's like, well, look at all the other stocks out there too. It's like, yeah, there might be some logic to why Tesla's going down, but a lot of stocks are going down. The S&P is down over 200 right now. Okay, So a lot of stuff's going down. Ethereum, if you can believe it or not, has looked a lot worse than Bitcoin. Look at this 30 EMA, how it's contained this entire trend. This thing halved in value, round numbers, and it did it almost all with Landry light and almost closing or never close above, except for maybe way back here, the 30 EMA. So when trend follow works, it works amazingly well. And something as simple as a 30-day exponential moving average can keep you out of a lot of trouble. I know. I feel like I'm broken record, beating a dead horse. Now, when crypto is blowing and going, sometimes you can just come in here, as I see each week, and buy the strongest ones. But right now, it's not that time. And as I also say each week, usually Bitcoin can be your bellwether, or should be your bellwether there. I've seen the memes where it's two drunk guys, easy for me to say, climbing up this rickety kind of ladder path or whatever you want to say. And Bitcoin's up front and he stumbles and falls back a little bit. And the guy behind him is one of the shit coins, right? Our old coins. And then he goes tumbling down, 80 or 90%. And I think it's a really good way to kind of visualize what happens. All right, let me go through stocks really quickly. And then if you guys want me to take a look at any individual stocks or any other markets, whatever, let me know and I'll be happy to do that. I'm not going to spend a lot of time on stocks because they're just ugly. So let's take a look at the P's. S&P 500, pretty ugly, right? Kind of in a free fall today. As I've been saying, it's almost like we needed a washout. And I hate to use the word hope, but hopefully today is the washout. You can see we are off the lows, but certainly nothing to get excited about. Let's take a look at spiders. Okay. Spiders off the lows a little bit too, but obviously big, ugly gap to the downside. Draw your big blue arrows. Pay attention to your bow ties or whatever other metric you want to use. You can see that we definitely remain in a downtrend. Now, the other thing to do, as I preach, is where are we now and where were we going back in time? So you can go all the way back to August of 2024, and the market has made zero progress since then on a net basis. Okay, so that's not a good thing. Obviously, anybody who bought above this level is losing money. So I would like to see this market bottom out sooner rather than later, but one day at a time. Nasdaq Composites, it obviously also imploded down nearly, look at that, 5% today. Wow, I didn't realize it was that ugly. And it's still looking pretty darn ugly today. I wouldn't go in and catch this falling knife just yet, at least. Wow, it's pretty ugly. Rusty 2000 never fails to disappoint and disappointing. Look at that, down over 5.5%. Rusty's been ugly forever, as I've been preaching. Throw a dart at these sectors. There's bots, which is robotics and AI. You can see banging out new lows with a bit of vigor. Cybersecurity, taking out that 200-day moving average, or at least trying. Again, as I've been saying, copper, of course, copper's getting whacked today too. Look at that. So copper, which was one of the last of the Mohicans, right? That's the commodity getting whacked in here. We'll see if that's just a pullback. Gold, the commodity, getting whacked a little bit, but off its worst levels. So it's good to see that it's coming back a little bit. So the baby's not getting thrown out with the bathwater completely, at least. Gold stocks, nice little outside day up. So gold stocks, one of the few areas that's trending. Back to the downside, throw a dart. Broker dealer breaking down with vigor. Although CME is actually doing pretty good. I think that's in the Landry 100. So that's one of the few stocks out there that's trending, obviously. Software, I mean, the list goes on and on. There's no need to go through all of them, obviously. Transports and jets have been getting whacked in here as of late. Let's see, was that transports? There's transports. You can see looking pretty ugly, down almost 7% today. Jets, look at that. Ugh, that's pretty ugly. Let's see, maybe I'm not looking at the tracker. Yeah, almost 7%. Banks, the mags right here at these multi-month lows, so pretty ugly stuff happening. like I said, you got to be careful with that relative strength game, because drugs, when the market was spilling a little bit or rolling over, were going up, and then now they roll back over. So that's a great example of why you don't want to play that in the bear market. Look at the semiconductors banging out new lows with vigor. We're down what, almost 8% on the semi. So, don't buy that stock sell just yet. All right, Craig. Craig usually has something good to say. Let's see what he says today. A lot of consumer staple stuff is okay. DG formed a base out of a fugly inverted cup and handle. Yeah, we talked about that one, didn't we? The problem with DG, as we were discussing, Craig, is that obviously you've got this big fat gap, and people are likely to want to get out. But I hear you; it's worked so far. Kind of a fugly, as you said, inverted cup and handle, and then also that I didn't like the fact that this was just one bar up in this breakout, but it did work. But you don't want to get FOMO. Not picking up on what you're saying, but just kind of a thought. You don't want to have FOMO because this one stock you're looking at went up when 99 of the other stocks you're looking at went down, okay? So yeah, you missed this one, but you also were prudent enough to miss those 99 others, and so it's like, oh well, so what, it goes up, okay? I got in at 76 and took half already. My new stop is just below 208 moving average. Price momentum oscillator ripping, oversold RSI, no complaints. Yeah, and if you're willing to go in and say, okay, and one thing that I could probably add to the list of things earlier is sometimes I get a Facebook group, somebody will bring up a stock and they'll tell me why they like it, but then they'll go, and they'll tell me why they don't. And it's like, when I see that, I'm like, watch your butts, okay? If you like something and there's a but, it's like you're realizing you're seeing something that's there that's not good in the charts, just like I said, this gap is not good and so on and so forth. Then you need to say, okay, was this really an FEA setup? Could I live with myself? I didn't take it or whatever. But, Craig's been at this for a long time. He knows what he's doing. He's like, okay, I think it's worth a shot. It's not a perfect setup. Let me give it a shot. I'm going in. But watch your butts. All right, any more? Let me look over here to YouTube. And you guys want to talk about anything on YouTube? All right. Well, I think that's it. I just want to thank all you guys and girls for attending. FYI, my wife told me to mention that my trading service is on sale. If you go to davelandry.com, not right now, but within like a few minutes after this is published, you should have a banner ad on that. If not, it's davelandry.com/trading service. That'll be in the links below. Everybody have a great weekend. To all you guys and girls here that are in Facebook, I'll see you in a few minutes. I have to have a little break, grab a little bite to eat, and I'll be right back. Everybody else, again, have a great weekend. Hope to see you all again next week, and may the trend be with you. Thank you so much. You're welcome.